It's Wednesday, March 20th, 2024, and this is Markets Daily, a show where we get into the minds of the smartest and most experienced investors, traders, and analysts. I'm Helene Braun, markets reporter at Coindesk, and before we get into our discussion, let's have a look at today's prices. Both Bitcoin and Ether seem to be catching a break today from yesterday's lows. According to Coindesk indices at 11 a.m. Eastern Time, Bitcoin was up about 2.5% over the past 24 hours, currently trading at $64,079. Ether is also up, even more significantly than Bitcoin, a little over 3.5%. It is trading at $3,357. If we look at the broader crypto market, the Coindesk 20 index is up about 1% this morning, so clearly Bitcoin and Ether are outperforming the broader market today. Now, let's bring in our guest for today, which is David Stryzewski, CEO of Sound Planning Group. Welcome to the show, David.
Hey, thanks for having me.
Thanks for being here. David, the Fed is concluding its March policy meeting today, and market forecasters aren't expecting any changes to the current interest rate. How do you expect the market to respond to that news if this is indeed the Fed's final decision this month? And how much longer do you think central bankers are going to be persistent here in holding rates steady?
Well, what an important question. I think all eyes are on the Fed right now. I think how they, come out today is going to determine how they're going to be positioning themselves for the rest of the year. Here's a couple things that we know for sure. One is that we began the year expecting 6, maybe even 7 market cuts. Well, right now that's all the way down to 3. And so that's obviously a very big change from where we were before. I think the point right now is that we are looking at CPI increasing, and the Fed is not going to be able to reduce interest rates like they had proposed that they were going to in December. With this higher interest rate environment, unemployment still hasn't gone up, at least in meaningful ways. Although I could make two sides of that argument if we actually dive into the data, and I can say that we actually are at recessionary times. But I believe that the Fed is looking at June for its first cut. The reason why they're going to do June for their first cut is that they're going to have to give the market something. I don't know though that they're going to get more than maybe even 2 rate cuts in this year. If we see inflation go higher, it actually could be that they have to increase rates, which would be a really, really, really dramatic change from what they did. But they're at risk right now of hiking too late in the cycle and also too close to the election. Because if they hike too close to the election, they're going to be viewed as being too political, and ultimately, that would be discrediting them as an organization. And if I can be honest with you, I think Jerome Powell cares a tremendous amount about his reputation, especially because he was wrong on inflation being transitory. He was wrong on the time frame to be jumping into raising interest rates. He's off by about 18 months. He didn't expect the banking crisis to happen last year. He's not going to be dropping rates too early, which is the Arthur Burns mistake that happened in the late 70s that led us to Fed Chairman Paul Volcker, who had to rack the rates up to like 17% at the Treasury level. So 5.25 right now, nothing in comparison to the place that Volcker had to take it. So, inflation doesn't move down in a straight line. I think that we need to kind of buckle up our seatbelts a little bit here because the market's kind of got ahead of itself. And, if these cuts don't manifest, I think that we will see some corrections here that ultimately could be pretty devastating for especially tech stocks that tend to be, negatively affected by some of these moves of the Fed.
So we've seen already a bit of a correction in Bitcoin and Ether over the week. How much more downside do you expect? Of course, today numbers were up a little bit, but when do you expect both tokens to reverse course here?
Well, we just have to remember that we're prior to the halving right now. We don't normally see big spikes on the upside prior to. It's just always been right after. And so 15% downturns is actually not a big deal when we look at a Bitcoin chart. I mean, if you zoom out on the weekly, you can see, wow, this looks actually pretty normal. We're actually used to more like 20, 30, and 40% downturns because it's a very volatile market when you're in this world of speculation. We're trying to find, what is fair market value. I think think that what you're recognizing right now is that, we had a bunch of hype come into this Bitcoin ETF. Clearly, we hit record highs, and this is a place where a lot of people will be taking profits. One of the things I personally did is I took profits when we hit at that record level. And, I wasn't expecting that I was going to be thinking about that. And I thought to myself, oh, yeah, right, we hit new record levels. I should probably take a little bit off the table here in the event that we pull back. Now I have dry powder to allocate back in. And of course, the goal here is to buy on the dips. So when will it go up? I don't know. I think it's pretty easy to say Bitcoin 100,000 by the year end. But let's just be honest. There's some central banks that don't really love some of this. The DNC is not very crypto friendly. And if they remain in power, maybe it's the end of 2026 that we hit 100,000. I don't know. I'm very bullish on the outcomes, though, long term. And I think that the toothpaste is out of the tube, if you will. And the world is looking at these assets as, places to allocate, given the fact that maybe the U.S. dollar is not as strong anymore with 34.5 trillion in debt. Maybe their own economies are not doing as well. And so, this is attracting a lot of first-time investors. And I think, we're going to be seeing new allocations come in. In fact, allocations are up. I was looking this morning, and since everything started, 151.4 billion have gone into these ETFs. So I would say that that's a tremendous amount of new capital. And this is a worldwide phenomenon, not just a U.S.-based case.
Speaking of ETFs, like you said, we are still seeing an enormous amount of inflows into the funds. Even though we did see slightly weaker inflows last week, Fidelity, nevertheless, recently made it in the top 5 of all ETFs, non-crypto related as well. And we're talking about volume here. Do you expect this level of demand to continue, or is this what we're seeing, or is what we're seeing still the initial excitement phase?
Well, we definitely are in the initial excitement phase. Anyone hears the word crypto, they think Bitcoin, right? Because it was the first mover. It's this blockchain, great story. Satoshi Nakamura, this idea of peer-to-peer, being able to buy and sell between one another without even trusting each other. It's pretty powerful stuff. Now, ultimately, where does this thing go? I believe that this is a more efficient system, and that it is going to, this is basically like we took paper money and we made it digital. This is digital ideas that we can include paper inside of that will be much more efficient and effective. And we're going to need ideas like that here going forward. So will these flows continue in the ETFs? Yeah, I believe so, because as an example, not a lot of people are opening, Coinbase accounts or different types of accounts. They're looking at this through their brokerage window. They got the same password as they had at their Schwab or Fidelity account before, and now they're just able to allocate a certain percentage. And what's interesting is I think a lot of the industry, as far as my industry goes, financial services, it has been illegal to represent Bitcoin or crypto assets because of a number of variables. But now there's beginning to be, an appetite for this, and people are asking for it. Now there's still guarding. I'll just tell you that my compliance department doesn't like me going out and promoting a lot of these things because, there's not a P&L in the same way as a company. And we're not talking normal metrics of evaluation. But what we do have as an understanding is that this is like a currency alternative, and supply and demand determines price. And so I think that the world recognizes the value here. I think that we're just in the early innings of seeing how this thing's going to grow. But noting this as well, a lot of people are saying, hey, you know what? Bitcoin 60, 70,000. Is it too late for me to get in? I don't believe it's too late to be in. In fact, if we understand that Bitcoins break down to 100 million individual pieces, then we recognize, well, I don't need to have a whole coin. I just need a denominated value of my U.S. dollars, in our case, that is in this type of an allocation. So I do expect it to continue to rise and grow, and I think that these ETFs are a very favorable way because you don't have to deal with you lose your keys, you lose your crypto.
So one fund that hasn't seen a good amount of inflows is GBTC, right, who earlier this week saw actually its biggest daily outflow is about 643 million since its launch about 2 months ago. Combined, it's seen roughly 12 billion in outflows, which somebody pointed out on X yesterday is the most that any ETF has seen since the stock market crash in 2009. When are these outflows starting to cause some headaches for the Grayscale team?
Great question. I think he was even, the CEO was even asked this question about a week or two ago. And in the interview, he was being, ultimately noted as, hey, you're one of the reasons why this Bitcoin ETF even happened to begin with. So thank you for doing that. But ultimately, in comparison to like BlackRock or iShares ETF on Bitcoin, the Grayscale coin is very expensive. And so, it's over 1% to custody. And so if you look at understanding, the costs of things associated, you want to do so in the least possible financial implication. And so, I personally custody these things directly, so there's no carry costs. But I think a lot of people are getting wise to this idea that, the fees inside of these mutual funds and ETFs are something important to look at, and more time and attention is going that direction.
So Grayscale CEO Michael Sonnenschein, he said he was going to lower rates in the next couple of months. But do you think it'll be too late by then to compete with BlackRock and Fidelity?
They are competing with the 100-pound gorillas or 1,000-pound gorillas. I don't know how to say it. They're way bigger than Grayscale, obviously. Yeah, it may be too little too late. The good news is that as a first mover and as somebody that's been running commercials and seeing ads all over the place, hopefully there's, for their sake, some level of, brand awareness that people will enjoy. But ultimately, this being a new idea, new concept, I think that people are looking for the most efficient and effective ways of doing it. So, there's going to be a migration over to more to models that are going to be able to do it for less.
All right. Thank you, David, for joining us today.